This is the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on February 1st, 2013 at 8:40 Mountain, 10:40 Eastern. Radio show runs News Talk 1010. We're on at our regular time after the Ontario Liberal leadership and obviously a new premier in place after the convention last week. We're back at our regular time in Toronto, News Talk 1010. Also 6:30 CHED in Edmonton and QR77 in Calgary. We are on the radio. We are online on Harold's websites, rarecoloreddiamonds.com and HESradio.com. The shows are archived, and we're portable too. You can take us anywhere. We're on demand through our iTunes podcast, World Financial Report on Radio. Just type that into iTunes. We're on your iPod, your iPad, your iPhone, any portable device. We are portable. We go anywhere you do. As we start to tape today's show, the United States job number came out. The rate went up to 7.9%. They only gained 157,000 new jobs. That is a brutal number. Also, 8.5 million Americans left the labor market during U.S. President Obama's first term. Can't get a job? Go on disability or food stamps. Also, there was a negative GDP number during the week, and they tried to spin it. They said it's a bad number, but it's the best worst number. Well, it's sort of like saying, you know, our team, we're not in the Super Bowl. We were dead last, but boy, we're the best, worst team there ever was. Which, let's face it, you're not in the Super Bowl. No one cares. One of the stories, too, that we kept an eye on, the Fed in the United States, they kept interest rates at 0 to 0.25%. They're going to continue to print and buy quantitative easing, $85 billion a month. And one of the stories, too, that we kept an eye on, it seemed Wall Street was trying to put forward this idea of the great rotation into stocks from bonds. And then there was a story that came out and said hedge funds are selling stocks, retail investors are buying. And lots of warnings about be careful. There could be a major pullback in the stock market. And then on the geopolitical front, there was a suicide bombing at a U.S. embassy in Turkey that killed 2 people. And that was as of the taping of this radio show on Friday morning. Harold, it's a time for hard assets. All you have to do is look at our newsletter. We can send it out to our radio listeners free of charge. Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com, 1-800-432-1022, or the company Harold recommends on the precious metal side, Worldwide Precious Metals, wwpmc.com, 1-866-623-2002. The companion to the radio show is our newsletter. It's free, and you go through that, Harold, and it just tells you everything you need to know about where you need to place your money during the times that we live in.
You're 100% right, Randy, and it's an excellent newsletter this week. There's so many things going on, and again, the markets are just so confusing at this particular point. I mean, you've got the Dow hitting 14,000 on Friday as we're taping the show, but then again, you reported that the GDP numbers were down, and that signals the potential of a recession. We'll talk about that in a second. Again, it just makes no sense. Last week, you had a rallying stock market because one stock, IBM, went up. One stock went up, and that pushed the market into positive territory. It's just not the market that we grew up with. It's a very dangerous time. Derivatives are out there and heavy leverage. The stock firms and the banks are back to 30 to 40 leverage like they had back in 2008. Believe me, people, it's a very, very trying time, and we got to be very, very careful. As we're taping the show, gold's up 860. We're trading at 1673. We did hit as high as 1683 so far today, but the market's been volatile. The thing is that all this week, gold has not been able to break that $1,700 level. It's tried to do it twice already, and $1,700 is not a major resistance level. $1,800 is. So basically, I feel very comfortable we're going to break $1,700 probably going into next week. Same scenario with silver. We're up 43 cents today. As we're taping the show, we're up to $32. Twice this week, silver tried to break 32.50 where there was minor resistance, and because it didn't break above it, it traded back to the high $30 level and is now back up to 32. So the markets are all over the place, and there is no doubt in my mind that we're going much, much higher in gold and silver. reason I say that is that you've got two different players in the market. You got the physical buyers, which is what we recommend, that the physical buyers own and buy physical gold and silver and hold on to it. And basically that market is showing shortages. The last couple of weeks we showed articles that showed that the U.S. and the Canadian mints were basically out of silver. The U.S. mint said they have no silver. So how in the world is silver not sitting at $100 at this point if there's no silver around? And the same scenario for gold. We read reports that Germany is looking for their gold and it's not around. Is it possible that the central banks have taken the gold that are owned by certain countries that they're supposed to be holding on to, and what evidently they've been doing is leasing it out several times? So the fact is, the banks that got into trouble in 2008, are they up to their old same shenanigans again, heavily leveraging everything and doing things, that are just not right? When you look at what's happening in the markets, things just don't add up. How in the world does the worst GDP number come out and the stock market is breaking 14,000? It makes no sense. And the funny thing is that it's only the hedge funds, certain hedge funds, that are doing okay in the market. The general public is not seeing any profits. So if we're sitting at 14,000 in the Dow, shouldn't prices be back to where they were in 2007 and 2008? I can assure you they're nowhere close to it. The banks, like for example, in 2007, look up General Electric, it was at $87. Now it's at $25. And all that the market looks at was when the Dow bottomed out in 2008 and dropped 50%, stocks like General Electric went down to $5. Well, gee, it's back up to $20 or $25, so they say it's up 500%. Why don't they look at it realistically and say that the market dropped in General Electric stock from $85 down to $5 and is now back up to $25? Big deal. You're still a loser in the market if you own General Motors or General Electric at a higher price. Be very, very careful. A lot of this is window dressing to make sure that things are looking better than what they are. I'm a Canadian living in the U.S., and I can assure you the middle class is getting hammered here. Gold has got to break 1,700 next week. I believe that will happen. Silver's got to break 3,250. These are minor resistance levels. The important levels for gold and silver. Gold's got to break 1,800. Even though the all-time high is 1920. The silver market has got to get over $38, $44, and then we'll attempt to break the $50 level again. Platinum's on fire, up $12 today at $16.94. We're looking to break $1,700 in platinum. I believe platinum is going to go substantially higher, as will palladium. Palladium is used in catalytic converters. It's at $758 today. It's up $12. We first recommended palladium back many years ago when it was at $170. Those clients that own palladium have done extremely well. As I said, the Dow Jones is going to break 14,000 today. We don't put a lot of credence in that because nobody's really making any big money. The TSX is up 65 points to 12,751. Again, I know it's difficult to sell out of your stocks, and most people won't do that. What you need to do is be able to hedge against that. So if the stock market does fall, you have certain assets that will protect you against that. It's about capital preservation, ladies and gentlemen. It's not so much about making big money right now because nobody's making big money. The U.S. dollar, that's the key to gold and silver going substantially higher. Back in 2012, the U.S. dollar had rallied up to 84 cents, and that's when gold dropped to 1,500, and that's when silver dropped to 26. But now we're now at 79.18. We've broken the 80-cent level, and as the U.S. dollar continues to fall, which I predict it will fall substantially, gold will move substantially higher, as will silver. So basically, if we get back down to the 72.5-cent level that we saw when gold hit $19.20 and silver hit $50, we should see a huge explosion in the price of gold and silver. If it breaks 72.50, which we predict it will longer term, that's why gold could go to $3,000, $4,000, $5,000, and silver could go to $100 to $200. We recommend being in physical assets that you can own and hold because, again, the world is a dangerous place at this point. Crude oil has been on fire. Crude oil has been one of our top recommendations. We started recommending oil back in the days at $18, but oil right now is trading at $98. It's about to break 100. There's problems in the Middle East. Israel and Syria went at it this week. Iran is getting involved. We know that Israel and Iran hate each other over the nuclear situation. Things are definitely going to blow up in the Middle East. You got massive problems in Egypt, massive problems going on all over the Middle East, and that's where oil comes from. If you don't own oil, you better own some. I would recommend even putting it in your RSP. There's a ETF called USO, US Oil, and we've seen oil in the last 2 months go from $80 up to almost $100 that we're at right now. So, Randy, again, that's what's happening in the markets right now. Again, that GDP number was so concerning, and so was the employment numbers. And again, for some reason, the market keeps on going up. So that's what's going on in the markets as we speak.
To invest in precious metals, connect with the only company Harold trusts and recommends you use. Gold, silver, platinum, palladium. Start your own precious metals investment account today. Worldwide Precious Metals, the company, www.pmc.com. Telephone number 1-866-623-2002, 1-866-623-2002. Their website, www.pmc.com. Get our free weekly newsletter from them. The companion to our radio show. We spent a lot of time putting it together. You're going to be on the same page that Harold and I are on when we're doing this radio show. You will see the exact same information with the links from Bloomberg and Reuters, all reputable websites, or even CNN Money, top websites on the web. Connect with Worldwide Precious Metals, 1-866-623-2002. www.pmc.com is their website. David Chapman, quote from a story we have in our newsletter this week. He said, in January 1980, when gold peaked at $875, the average price for gold for the month was $669. The monetary base in January 1980 was $132.4 billion. It only took 198 million ounces of gold to cover the monetary base. But gold, they said, was in a bubble at the time. If the same thing were to occur today, gold would have to be trading at almost $14,000 in order to reach that low coverage. On that basis, gold prices have a long way to go before they reach bubble territory. And it's interesting, I found another story. David Chapman, he's a technical analyst here in Canada. You might have seen him on the Canadian Business Channel in the past. Paul Brodsky was interviewed by King World News' Eric King, and here's a little quote. He said, at $2.7 trillion in the monetary base money, our call was for $10,000 gold. As base money is now rising from additional QE, the shadow gold price should rise to $15,000 in roughly 1 year's time. That according to Paul Brodsky. And obviously that is a very aggressive number, but it is interesting to note that the United States, as we reported last week on their Fed balance sheet, have $3 trillion on the balance sheet right now. They're printing money and they're buying their own bonds. Also, Lance Roberts said this week, the current belief is that central banks will have the foresight to withdraw the stimulus before the next bubble is formed. Unfortunately, there's no historical precedence that supports that claim. However, with the markets fully inflated, we have reached the point that where even a small exogenous shock will likely have an exaggerated effect on the market. There are times that investors can safely buy and hold stocks. This is not one of them. Also, David Rosenberg said, money printing creates illusionary wealth and buys time. But if this was truly the answer to the deleveraging cycle, Zimbabwe would be a member of the G10. And Peter Morici, who's an economist and professor at the Smith School of Business, University of Maryland, said, the ordinary investor is simply outgunned. For him, stocks have become a rigged game. And Adam Hamilton also talks about stocks. He says, the absolute worst time to buy the general stock market is when fear, as measured by implied volatility, is extremely low. Such high complacency times herald imminent major sell-off. Sharp corrections, even in ongoing bull markets, and with today's cyclical bull defying the averages for size and longevity, the odds of a new cyclical bear are higher than ever. Foolishly buying general stocks heading into a bear will decimate your wealth. And I thought it was interesting that we had Rick Rule from Sprott Asset Management talking this week in a story with King World News. We are in the midst of a commodity supercycle. of the same dimension we experienced in the 70s. By the way, I don't disagree. There are attempts being made to suppress the price of gold, but the market is bigger than the morons who are trying to suppress it. As far as I'm concerned, the harder they try and suppress it, the bigger the ultimate move will be. At some point in time, rational people who can add and subtract, are going to say, would I rather have my wealth held in the form of a floating abstract like the euro or yen or US dollar, or would I rather have an asset that is not simultaneously someone else's responsibility, something that can't be printed and counterfeited? And Harold, we talked last week on the show, and you mentioned it off the top, that there was a shortage of coins, and that was confirmed again this week. The U.S. Mint, their silver coin sales gained to an all-time high in January. In fact, they had to suspend sales for a while, and they actually have gone back on sale again. But, in a time where you have physical demand at its peak and its strongest, we have to know for sure that there's a paper market and a physical market. And as I agree with Rick Rule, one day that physical market will win out, and we're going to see much higher prices in gold and silver.
No doubt in my mind. Again, once they go on, get away from fooling around with the markets and manipulating what they're doing at this point here, the trend is always your friend. The markets will always come back to where they're supposed to be. Just look at oil back when it hit $170. That was in 2008. Then all of a sudden, oil that was so bullish, they brought it all the way down, if you remember, Randy, all the way back down to $50 from
That's
$170.
Right.
So the people that were long the market, that did the right thing, to put up their and risk their money and put it into the market, found that because 2008 was such a dangerous time and the markets were in such disarray, that all of a sudden oil was trading down at 50 and wiped out a lot of speculators, but also wiped out companies that depended on the high price of oil. So again, the trend is always your friend. The markets will always come back, and the best result is, look at oil right now. It's back up to almost 100, and more than likely you're going to go back to that 150 to 170 level that we saw in 2008. So, again, there's no doubt in my mind where these markets are going to go over the longer term. But what we say is own the physical metal. Don't trade the market, because you've got the paper traders that are short-term traders that will trade gold and silver or oil or any of these commodities and only be in the market for 2 or 3 days at a time. We don't do that. We bought and hold gold since 1999, 2000. That's how you make money in the market, not trading in and out. 90% of the traders that trade in the futures market lose their money. We're not recommending you do that. We recommend you buy physical gold, physical silver, physical diamonds. You're going to get through these difficult times, and you're actually going to end up making an awful lot of money.
Speak with Worldwide Precious Metals, the company Harold recommends you use when it comes to investing in gold, silver, platinum, palladium. The only company he recommends, he has 100% confidence in them. 1-866-623-2002. The website, wwpmc.com, wwpmc.com, 1-866-623-2002. Speak to them about getting our free weekly newsletter. A person that I've always had a lot of time for is Don Cox. He worked through the Bank of Montreal, and he was interviewed by MindWeb this week. He says it's impossible to conceive of a more bullish long-term backdrop for gold. As global commodity strategist Don Cox ends his Basic Point series, and he used to write a weekly commentary that was legendary, and he did a call as well, he remains now and for the long term bullish about gold. Don Cox, very, very bullish on gold, and I agree with him 100%. One of the people that we've kept an eye on for quite some time is John Embry from Sprott Asset Management. And on the silver side of the market, he said this week, the silver market is grotesquely undervalued, and there are mounting shortages that are being documented all over the place. I just see a supply-demand picture that is amazingly bullish. And when you superimpose that on the existing short positions, the fact that the silver price has been held back so much, when this gets loose and runs, I think people will be shocked in how fast and how far it ultimately goes. I will reiterate, I have no problem with silver priced in the hundreds and hundreds of dollars. Also, William Kay, who was interviewed this week, we have the story in the newsletter. He believes and he expects a massive silver short squeeze. And he says anyone who does the math can make a more compelling case for silver than gold. The amount of claims on silver that exist relative to the known amount of silver above ground, those numbers are even more staggering than they are for gold. If silver could, he says silver could easily go up 10 times. We're bullish on silver. We own silver. Also, Dan Norsini. Silver now very close to a major short squeeze. And he believes that we could see, once we get through some of these numbers, $32.50 and $34.50, we could go to $40 very, very quickly. And Harold, it's amazing to me how bullish some of these top-notch people, and they've been right for a long time, how bullish they are on gold and silver. It's a matter in my mind of not when, but if this market takes off, and especially when the Senate in the United States, along with the House, raised the debt ceiling in the United States, but they're only going to do it until May. So they're going to be having that fight again. They got through the fiscal cliff, and then they're going to be fighting about a budget. They don't have a budget, and then they'll be fighting about the obviously the debt ceiling again. So it's a time where people need to have hard assets, and we have about 2 minutes here.
It's true. What you need to do is go back in history now, where it is true that we've really never been in this type of scenario before, but there have been times in the markets that have been, very risky and very volatile like they are at this point. But basically, for most investors, and I certainly understand it because, we look at the markets and say, this just doesn't make any sense. Why would the market do this when this is happening? Everything's got to work its way out. And like I say, the governments and the Federal Reserve at this point are in so much trouble, and they don't know what to do because they don't have experience going through this. Has never happened before. That's why the markets don't know what they're doing at this point. There's no doubt that these are action-reaction markets, and when the dollar falls, and it will continue to do that because of printing so much money, gold and silver will run. So it's only a matter of time for us to hit new highs again, and I'm very confident that that's going to happen.
1-866-623-2002. Call that number now and start your own precious metals investment account today. Gold, silver, platinum, palladium. Speak with Worldwide Precious Metals, the company Harold recommends you use. 1-866-623-2002. One thing that we haven't spent a lot of time on recently is the sovereign debt crisis. There is a section in our newsletter this week about it. Spanish youth unemployment is on the verge of breaking 60%. You heard right. 60%. The Spanish government was rocked by secret accounts that allegedly show massive corruption. Surprise, surprise. And Spain, their economy is in deep, deep trouble. One of the stats I heard as well, a third of Europeans have no savings. Tell me that there isn't going to be social unrest at some point in Europe when you hear 60% youth unemployment and adults at 25%. Speak with Worldwide Precious Metals. 1-866-623-2002. Website wwpmc.com. Going to come back and talk about diamonds as the World Financial Report on radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping this show on February 1st, 2013. Our time is 9:04 Mountain, 11:04 Eastern. Radio show run, News Talk 1010 in Toronto. Also 630 Chet Edmonton, QR77 in Calgary. We're on the radio. We're online at Harold's websites, rarecoloreddiamonds.com, HESradio.com. The shows are archived there. You can catch us on demand through iTunes. The podcast we have, get iTunes on your computer. You can listen to us. All the shows are there. You can listen to the show on your iPad, your iPod, your iPhone, any portable device. The radio show is portable. Connect with Harold at rarecoloreddiamonds.com, 1-800-432-1022. He recommends Worldwide Precious Metals for investing in gold and silver, platinum, palladium. Their telephone number, 1-866-623-2002. You can get our free weekly newsletter from either Harold or Worldwide. And our radio show, we have it on the air. The newsletter is the companion to our radio show. This week, we have a featured diamond, and it is absolutely stunning. It's a must-see diamond. And Harold, it's a 2.64 radiant cut, fancy, vivid, yellow, internally flawless. We have it on the website, rarecoloreddiamonds.com. It's the featured diamond of the week. We have it in the newsletter. It is absolutely stunning.
You bet it is. It's a tremendous, tremendous diamond. Now, those that listen to the radio show remember that last year we talked about a diamond similar to this that went up for auction at Christie's auction house in New York. And basically, it was a 2.5 carat marquee, fancy, vivid, yellow VVS1 diamond. And they estimated that the diamond itself would sell between $120,000 and $180,000. But then they put it in a Bulgari ring setting, and the diamond sold at Christie's auction house. We can send you the results for $950,000. So there was a diamond last year, similar to the one that we have, although ours is of a higher quality, and it was priced and estimated that it was worth about $180,000 from Christie's, and it sold for $950,000. If that doesn't tell you what the state of the diamond market is at this particular point, so the featured diamond this week is one of the rarest yellow diamonds you'll ever get. It's a 264 radiant cut, fancy, vivid yellow, internally flawless. The diamond's in the in and around the $160,000 range. It's absolutely spectacular. You can see by the video. And again, diamonds like this very seldom exist. The vivid yellow flawlesses are becoming nearly impossible to get. We just have received and cut them ourselves, 11 magnificent diamonds, and they're just selling almost as fast as we get them. This is a very special diamond that if you put it away for the next 10 years, you make a tremendous amount of money on it. It's a 264 radiant cut, fancy, vivid yellow, internally flawless diamond. When you see the video, you'll understand exactly what I'm talking about. To give you an indication as to what's happening in the diamond market, so you could get an indication as to what pink diamonds, for example, are doing over the last several years. Just so you know, in 2003, a 3-carat fancy intense pink diamond sold for $115,000 a carat. That was in 2003, $115,000 a carat. By 2007, 4 years later, that same diamond was selling for approximately $390,000 a carat. And by 2011, it was up to $625,000 a carat. So for those that think that pink diamonds or diamonds in general are not great investments, I've given you a couple of examples. Last year, a 2.5 carat vivid yellow diamond sold for 5 to 6 times what the estimated value was. And if you look at pink diamonds from 2003 to 2011, they went up 443%. That's what I'm talking about. That's what alternative investments are, because every market has its time. In the 90s, it was the stock market. Stocks were doubling and tripling almost at will. But then the 1999 period came, and the dot-com companies plummeted. Nortel dropped from 125 down to 50 cents. The market was in shambles. It took all the way till 2008, 9 years later, for the market to come back up to 14,000. Then it plummeted again. How in the world do we continue to try to build wealth when these type of markets are taking your money away constantly? So basically, every market has its time. Now is the time for hard assets. You will see a major rally coming again in gold and silver. It's inevitable. There's shortages in physical gold, shortages in physical silver. The U.S. dollar is dropping, and those type of assets will go up in value. They're action-reaction markets. The U.S. dollar falls, gold goes up. Just look over history. It happens all the time. The diamond market is on fire. Pink diamonds over an 8-year period went up 443%. Vivid yellow flawless diamonds are skyrocketing in price, and we're the only company that has them. Again, we put a tremendous amount of money back into the diamond market to get the diamonds that our clients need to make the money that they need to make in this market. There are certain diamonds that are negative correlated to the stock market. You know, Randy and I brought up during the first part of the show how dangerous things are, that corporations are selling their stocks as the general public is buying. Sound familiar? It happened every time the market plummeted. The general public was buying as the major corporations were selling their stocks. Doesn't seem right, but the small investor, the general public, that's why they get hurt all the time. Our show is for the small investor. Our show is for the everyday hard-working man and woman that works hard, puts some money away, and just doesn't want to lose their money. We're not the Warren Buffetts of the world that are billionaires. We're hard-working Canadians that put our money away and want to see it grow a little bit. We can't afford to lose our money anymore. If you lost your money in 1999 and 2008, you got to realize that we're almost at that same situation again. There are certain assets that can protect you against that. If you don't want to sell out of your stock portfolio for whatever reason, taxes, or you just think it's still going to go up, there are certain diamonds that can protect you and hedge you against this falling stock market. In 2008, when the Dow Jones dropped from 14,000 to 6,500 and everybody got crushed in the market, flawless white diamonds went up 50%. They're negative correlated to the stock market. The Dow dropped by 50%. These diamonds went up by 50%. If you had $1 million in the stock market, you were worth $500,000 a month later. If you had $1 million in the flawless white market, you were worth $1.5 million a few months later. So again, there are certain assets out there that can protect you and give you the profit that you need to offset the losses that are coming in the paper asset market. There's some brilliant people out there, people that are much, much smarter, than myself. And what they are saying is that there is such a fear in the market that the derivatives market could collapse the markets like they did back in 2008 when Lehman Brothers went under. They're in the quadrillions of dollars, quadrillions, and it's not a regulated market. We need to do the right thing, because if in your 50s, 60s, or 70s, you're not going to make the money back again if you lose it this time. It's happened 3 times in the last 13 years, that there's 2 times that the market has plummeted, and now they're saying it could happen again. Let's not take the risk. If you don't want to sell out of your paper assets, at least get yourself something that will offset it. But there are opportunities to make an awful lot of money. Yellow flawless diamonds increase by 25% a year, double every 4 years. You tell me any other investment out there right now that could give you a 25% return with as little risk that is in a yellow flawless diamond. And during times of high inflation, those were the diamonds that went up 500% in 1979 and 80, as did flawlesses, as did other diamonds. Then you've got the pink diamond market. The Argyle mine that produces 95% of the world's pink is going to close in 5 years. Those diamonds will go up 8 to 10 times what today's prices are. I mean, from 2003 to 2011, they went up 443%. Why shouldn't they go up substantially more than that if the mine is going to close and there's no more pink diamonds left? This is what's happening in the market. The other thing is the flawless white market. They're negative correlated to stocks. When stocks drop, these diamonds go up. There's a fund in Europe out of Luxembourg that is permitted to do a diamond fund, but they have to buy physical diamonds. They can't buy paper. They can't buy anything else. It's got to be physical diamonds. And the bank and the country that's approving this fund is insisting on 1 to 5 carat, round, brilliant, flawless, excellent diamonds, perfect in every way. Just so happens that my company cuts 90% of the world's supply of that. We're going to supply this fund with almost all of the diamonds that they need to be successful. I'm recommending to my clients to buy these type of diamonds, if you can afford them, to put away for your future. They can go up 500%, 1,000% in a fairly short period of time over the next decade. For those that have money in their RSP and they're not seeing any returns or the returns that they need, put away a yellow flawless diamond. They cost you $15,000 to $20,000 or $30,000, whatever color you buy. They've got to be internally flawless, and put them away for 10 years. A $20,000 diamond 10 years from now could be worth $80,000 to $100,000 to you, and these assets never ever decline in value. An Argyle pink can go up as much as 1,000% over the next 10 years, and so can these flawless whites. So that's what I recommend very highly. You can also own these diamonds. We ship them directly to you. You own them outright. We pay for the shipping, the insurance, and the taxes coming into Canada. We also send you our newsletters each week, our diamond newsletters each month, auction results, and when the time comes to sell it, we own H. Siegel Fine Auctions, the only live real-time auction site dedicated to selling our clients' diamonds and high-end collectibles. We just had an auction on Wednesday. We sold 100% of the items that came up for bid. It was very, very exciting. And again, the future is in hard assets, at least at this time, for the next 5 to 10 years. We very strongly recommend that you look seriously at the rare colored diamond market as a way to, number one, protect what you have, but there's nothing wrong with being smart in investing and making money when most people are not. Gold, silver, and certain diamonds will get you to where you need to go, especially with heavy inflation coming.
RareColoredDiamonds.com. Connect with Harold at RareColoredDiamonds.com, 1-800-432-1022. Harold's auction site is hsfineauctions.com, hsfineauctions.com. This week in our newsletter, we have 2 stories that are must-reads. Uncovering the Mystery of Pinks, Why Pink Diamonds Are Pink. You'll find that story interesting as well. We have a story from, and I wanted for those that may have missed it at the end of last year to see it now. The Wall Street Journal did a story on Rio Tinto's rare pink diamond Argyle auction. And demand for rare and pricey pink diamonds continues to soar, with Rio Tinto's annual auction of gems from its Argyle mine in Western Australia attracting an unprecedented level of investor interest. There is very strong bidding, as it is every year, for their 56 pink diamonds, including 2 red stones and 19 lots of blue. The price, demand, and global reach of Argyle pink diamonds has reached a new level. That, according to Josephine Johnson, manager of Rio Tinto's Argyle pink diamonds. Read that story. It will give you an idea of the potential of the pink diamond market. And if you want to know the mystery surrounding why pink diamonds are pink, they have actually done an exhaustive study, and you can read about it. Get the newsletter from Harold, RareColoredDiamonds.com, 1-800-432-1022. And Harold's website for auctions, hsfineauctions.com. And Harold, that was a smash success. The diamonds did very, very well. The pink diamonds did very well. And the coins, they were very, very popular as well.
You bet they are. Again, I'm very excited about what we're bringing. It still needs a lot of work because, again, we have to attract audiences and clients all over the world, which is what we've dedicated ourselves to do. So, again, this was I believe, our 8th or 9th auction. We sold 100% of what we put up. I was very excited about that. We are going to add tremendously to the auctions. We're going to hold them every single month, and we are increasing our viewing audience and finding higher net worth individuals from all over the world. We hired a PR firm, and we're putting the money into the auction site because that is definitely the future. We built this for our clients. It's the only way to resell your high-end collectibles, and we built it for our clients to do exactly that. So I'm very excited about it, extremely enthused. Again, it's a brand new business. Most clients are not selling their diamonds at this point. They're buying. So the items that really came up for bid were from my personal collection. You know, the Argyle Pinks were diamonds that I bought 10 years ago at much, much lower prices than what they are right now, and the prices have increased significantly. And again, I'm extremely proud and excited about that, but by far these prices will start to skyrocket, and what we need to concentrate on doing is increasing our viewing audience from all over the world, especially in Europe and parts of the world where their currency markets are stronger than ours. That will really add a lot of value to the market. So again, we sold 100% of what we put up. That's almost unheard of in the auction business, and again, I'm extremely proud as to what we built.
Speak with Harold about Rare Colored Diamonds, RareColoredDiamonds.com, 1-800-432-1022, 1-800-432-1022. One of the things that Harold has spoken to us for a long time about why you want to be in diamonds, gold, and silver is inflation. And Greg Hunter, he used to be with CNN. He has his own website now and does stories and interviews on the financial side of the world. He interviewed John Williams from Shadow Stats, and you can see this in our newsletter. May 2013, The End of the Road is the title of the interview. Anybody who thinks the United States is in a so-called recovery isn't listening to economist John Williams. He contends we haven't had a recovery and we're not about to have one, and it's getting worse, Williams says, because the consumer is in very serious trouble. The average guy is not making it. His income is not keeping up with inflation. As far as Congress getting the budget and debt ceiling under control, Williams says both sides are faced with devil's choices. If the Congress does not get its financial house in order by the new deadline, mid-May, Williams contends it will be the end of the road. They are not going to have another opportunity. They are pushing the limit as it is now. He expects a negative reaction in the next 3 to 4 months to the U.S. dollar, and he adamantly continues to predict hyperinflation to the U.S. dollar by the end of 2014. And John Williams of Shadow Stats is not a guy who is airy-fairy. He's a solid guy. Shadow Stats, the website, has been around for a long time. What he's done is kept track of inflation based on past statistics and how they monitored inflation. It's changed over the years. And if you take a look at how that was done in the Reagan era, we would be at around 7, 8, 9, 10% inflation if it was calculated the way it was back when Ronald Reagan was the U.S. president. So this is a solid guy here, and his heating hyperinflation, Harold, definitely needs to be taken into account.
I followed him for many, many years. I've traded commodities for over 35 years, and I've tracked him, and he is very, very good. Again, I believe exactly the same thing. I don't see any way in the world that we're not going to have extreme inflation. That's what I've prepared my family for and my businesses and everything. So, again, we've made a drastic changes in the way that we invest due to the fact that I believe exactly what he is saying is so. Hyperinflation will come because, again, the Federal Reserve has printed such a massive amount of money that it just keeps on reducing the value of what the dollar is. It's like anything else. If you overproduce oil, the prices are going to fall. If you overproduce grains, the prices are going to fall. The same thing with currency. When you overproduce a currency like we're doing right now, the value drops. Back in the 90s, the U.S. dollar was one of the strongest currencies in the world. Now it's one of the weakest, and it's going to get much weaker. If they weren't supporting it and trying to keep the dollar high, mostly to appease China, where they borrowed a huge amount of money, the fact is the dollar would be below 72 cents right now. I think, as does Williams, that the dollar will get down into the mid-50-cent range, which is why gold could literally go into the several thousands, as could silver. So, again, in no way, shape, or form get delusioned as to what's going on right now. The market has been in a funk for the last year, in my opinion, trading in a range, but a lot of things have caused that to happen. The presidential election, the uncertainties in the markets, and just plain out manipulating and supporting markets that they should be allowing to trade on their own. That's the upsetting thing, is sometimes the government gets involved to right a market when the fact is that these are supposed to be free markets and they're supposed to trade based on supply and demand and buyers and sellers. So again, everything will work out, and as I've always said, the trend is your friend. They may have forced oil down from 170 or 150 all the way down to $50, but look where it is right now. It's back up to almost 100, and there's no doubt in my mind that oil is going to 170 again. There's no doubt in my mind that gold will break 1920, silver will break 50, and go on to much, much higher prices. So again, don't be disillusioned, but keep your eyes open, because there's dangers out there that are so severe that if you make one bad move, you could lose all of your money. If you want to retire comfortably, put some money away in diamonds, rare-colored diamonds, for the next 10 or 20 years. They will save your financial life and give you the returns that you need in order to grow financially. But if you don't do anything, if you just say, whatever's going to happen is out of my control, you're going to find that we're going to have a repeat of 2008, and it's just going to be way too difficult to make our money back. We just work way too hard not to do the right thing at this point. And as I've always said, every market has its time. 90% of the money is made by 10% of the people, and all Randy and I care about is the listeners of our show are in that 10% that make all the money.
Speak with Harold about diamonds, rarecoloreddiamonds.com, rarecoloreddiamonds.com, telephone number 1-800-432-1022 to invest in precious metals. The company Harold recommends you use, Canadian company in business over 10 years, worldwide precious metals, 1-866-623-2002. Their website is www.pmc.com. You can get our free weekly newsletter from Harold or worldwide. William Kay was interviewed by King World News this week, and I think this really does, what he says here does summarize where we find ourselves. He says we will see a global financial meltdown. All we need is for the Fed to live up to its promise that it has an exit strategy. I'm here to say they don't have an exit strategy, and what he's talking about is when they stop with the quantitative easing and the printing of money, what will happen? He says there isn't an exit. A return to normalized interest rates, a withdrawal by the Fed and other central banks in an effort to monetize debt and artificially suppress interest rates, as soon as that ceases, the system itself will freeze up just as it did a few years ago. The reason it will freeze up is the system can't handle anything close to what would be considered historically normal interest rates. The stock of debt globally at the stage we're in cannot be serviced. So the system inevitably will break down. The problem, he says, the problem this time is likely to be much worse than it ever has been in the past because the debt bubble has never been this big at any point in the past. And Harold, I agree with William K. We are in uncharted territory for what they are doing on monetary policy around the world with quantitative easing, printing money, buying bonds. When this ends, we do not know how it will all end up. I don't think it's going to be very pretty. In fact, Bill Gross said this week he's very afraid of the markets. Bond guru and PIMCO managing director, he's not buying into this bull market in stocks. In fact, he is warning investors to be afraid, very afraid, of how inflation and the flood of cheap money will affect all investments. Investors should be prepared to accept lower returns on bonds, stocks, real estate, derivative strategies. He wrote in a monthly letter entitled Credit Supernova. And he's championing something that we have for a long time, a bunker mentality. Gross told investors to buy treasuries with shorter durations and buy gold or other investments that you can sink your teeth into. So, Harold, we have about 2 minutes left here. That's something that we have advocated for a long time. Have an asset that you can hold in your hand. If William K. is right, if John Williams is right, even if they're half right, you want to have that insurance policy in your portfolio.
You bet you do. After the fact is not going to do any good. So it's just a matter that we sit down. It's one thing to be afraid and nervous and read what's in the newsletters and read what's in the financial pages, and then you watch CNBC and you see them dancing the jig because the stock market's breaking 14,000. How in the world are we in a euphoric state on Wall Street when the GDP number came out to be the worst case scenario? The unemployment is now going back up. And all in all, we could see a downturn in this market so fast it's not even funny. Again, the most important thing for us at this particular point is to remain conservative and to keep our head about us because, again, the dangers are getting more severe every day. We've seen it in 1999, we've seen it in 2008, and it's coming again. Let's do the right thing and get into the right markets that are going to protect us and give us, the assets that we need to make the maximum return on our invested dollar instead of the opposite.
One thing I would really encourage people to do, get our newsletter from Worldwide or from Herald, www.pmc.com, 1-866-623-2002 for precious metals, for diamonds, rarecoloreddiamonds.com, 1-800-432-1022. Get the newsletter. There is a chart at the very beginning. Hedge funds are selling stocks as mom and pop investors plunge in. Stocks have headed higher without respite to start 2013. Many strategists are warning that a sell-off is in order. Well, we're seeing hedge funds selling and average investors buying. Harold, with about 30 seconds left here, a dangerous combination.
You better believe it is, Randy. Get the newsletter this week. Read all about it. Again, the information is there for you to make an intelligent business decision.
Thank you very much, Harold Siegel.
It's my pleasure. I wish everybody a wonderful weekend. Enjoy the Super Bowl and have a profitable day.
Connect with Harold at rarecoloreddiamonds.com. Rarecoloreddiamonds.com. Speak personally and privately with him at 1-800-432-1022. And it is so imperative that you have gold and silver in your portfolio. If you'd like to learn more about platinum and palladium Worldwide Precious Metals will help you with that as well. Their website, wwpmc.com. Telephone number 1-866-623-2002. Start your own precious metals investment account today. We can't urge you enough. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.